Welcome to the Profit Answer Man, Chris Papin. It's great to have you join us today.
Pleasure to be here. Thank you.
Can you share a little bit about yourself and your business?
Yeah, so kind of the elevator speech of who we are is we are representatives of small businesses and small business owners. I happen to be an attorney, a CPA. I carry an insurance license for some estate planning specific scenarios. But I don't like all of that to confuse that. Again, we work with those small business owners. A lot of times it's startups, creating entities, choosing tax efficient entity structures. Sometimes it's just folks that are saying, hey, I feel like I'm paying too much in taxes, or there was a big surprise, the uh-oh moment that pops up along the way. But our position is trying to look forward, help people be strategic rather than reactionary. And right now it's, a very popular space to be in for those that are any good at it. So we enjoy opportunities to visit with folks that are there.
So two things. Let's take and I think that's a big part of it, right? For those that are good at it. And I say that because historically, CPAs used to be really good at it, but I'm talking about 30 years ago. And they got so busy and so bogged down, they forgot how to be essentially business advisors, and they turned into tax prep or whatever that is that they do. And they got so busy, they stopped talking to their clients, which is a shame because they need help. Plus there was a language barrier. Debits, credits, I don't care about that. Where's my cash and how do I make it grow?
Right. Yeah. I think one item that is really important in there too is sometimes the client doesn't know what to ask for. So
they never do. Most of these people did not go and get an MBA. I got an MBA. I don't even know what the hell they asked for, right? Because they didn't teach you that in MBA school.
No.
As a matter of fact, in MBA school, they would tell people like the guy who created FedEx and Dell, yeah, that'll never happen. Those aren't good business ideas.
there's a trend that develops there, right?
It's all right. The other thing you talked about is the right business entity selection. And this is the one that drives me up the wall. Because I think starting out, if you're just a solo person, starting out as a sole prop, unless you have liability, in other words, somebody's going to fall in your business, I think get yourself some money before you start worrying about this, right?
Yeah, Rocky.
Assuming there's no risk.
Really well said, because you can go to YouTube and get free advice that says you need $10,000 worth of compliance work. If you don't have any revenue, who cares?
Yeah.
But insurance is always the first line of defense. And it's better than having a very elaborate entity structure, which is $1,500, $2,000 for startups each year. And that's a lot better than overcomplicating, because when you overcomplicate, you have to track it and you've got to detail it. And you got to learn it. And we know the battles that are there, but yeah, really well said in the sense of sometimes you just need to start.
And then the second part is everyone screams S Corp, S Corp, S Corp. And I'm not against S Corps. I think they are very useful at certain times and in certain places. So I don't think S Corps are good for partnerships. And I think if you're going to be in a partnership with somebody else, the main company should be LLCs. In other words, one LLC, and then each of the owners should have their own S Corp or LLC as their ownership in that. Because I don't know about you. Well, I know you like soccer. We'll talk about that. You might want to have business soccer expenses, and I might want to have business dinner expenses. And I don't want to argue with you. And I want my car and you want your airplane, and that's fine. But if we've got these entities set up this way, we can each play our own games. The other thing is, I think there's a time, if you start to make a lot of money, where S Corps are not tax efficient because of complicated things that we're not going to get into. Am I on the money with that?
It's almost like we're drinking from the same Kool-Aid or something along this deal. I look through the lens first of risk, which is where we started today, and then second around the end goal. If the client will kind of enumerate to me what they think the variables are, the story should dictate the entity decisions. It shouldn't be, oh, I heard this on the news, and because the math's best, I'm going to do that. That overcomplicates again. So coming back to your scenario where you have differing opinions on business expenses, you can segregate audit risk by being intentional with the way you structure your entities and your contracts and everything else. So giving people a perspective there, I think, is more important than let's just run to the popular thing that is maybe an off-the-shelf solution. Everybody wants that, but that's just not the way it works.
No, and honestly, in the beginning, you probably don't even know the answers to these questions. But once you get moving, you will. And then honestly, I think the tax laws are all going to change next year, depending on the election and what happens with that. And that changes the game again. And so you have to be able to go through all of those. In any case, we always love Profit First. How did you learn about Profit First?
So mine's a little bit of a backwards way. It was introduced to me through a client. And
by the way, before you continue, you'd be shocked at how many Profit First professionals were introduced to Profit First by their clients, and they saw it work and they went, "Oh, we should do this."
All of a sudden, this makes sense. Well, maybe I'm not alone. That makes me feel better.
You're not alone.
So the kind of the short version is client brought it to us and said, "Hey, here's kind of the way I look at things financially," and fundamentally, everything about it we believed in. So we walked through with the client their view of how their money should flow. And, they're looking at certain percentages for investments and for taxes and for living, and a little bit of an overkill in their mind because they wanted to go, a bank account for every little purpose. And I was like, or perhaps we could just use a chart of accounts and track that. But fast forward, and this is really where I think kind of the funny part is this person had all of the infrastructure on earth. They thought about everything. They were probably one of the more sophisticated financial clients from a financial planning standpoint. And then they took a step back and said, okay, well, now what? And for real, took a step back and said, now what? They did not actually grind it out in their business to generate sales.
Oops.
Right? So there was a little bit of this, I call it execution because it translates well, but we had to go back to, in this case, they were a professional working with their hands. If they are not doing those tasks, they're not getting paid. So we had to look through a different lens because I think they kind of looked at it like, a Coca-Cola corporation of, oh, well, I can just pull the levers and the worker bees will do their work. And that wasn't the case. So there was this little bit of re-engagement where we drank the Kool-Aid, we're all in. We love the Profit First model, and the client thought it didn't work. And I'm going, the only thing not working is you, man.
Here is the secret to Profit First. You have to have revenue. And the good thing about Profit First is every time you go to do your allocation, you see how much revenue you had. You get an immediate kick in the pants. Was it good? Was it bad? Thumbs up, thumbs down, and what are you going to do about it for the next week? And that way, I think it's good because it gives you that clarity and that immediate feedback that I don't think you get through any accounting software because it's not quick enough. This is real time, cash in bank. So let's talk about personal finance, personal goals, and how that translates to business goals. Because I've noticed a lot of times business owners aren't necessarily doing this correctly, or they're not being reasonable with it.
Yeah. So we always start, well, I call it a top 10 list, but the idea is to kind of align with client goals, wishes, ambitions, whatever it is. And to your point, I think a lot of people have a concept of, if I earn $100,000, I have $100,000 to spend. And simple view, maybe they're right, maybe they're wrong. It depends. The attorney in me has got to qualify that. But you've got to have an understanding of, if you want $100,000 ski boat, you've got to drive that backwards through the formula and understand that may mean you need $1 million in revenue. And if you don't understand that, at least at a surface level, all of the expectations, whether they're right or wrong, are skewed because the perception is off. So I tease people about the colors. I got my background and I've got abstract art. And, if we're both talking blue, we can both be right. But if I'm talking a lighter shade of blue than you are, we could be on two different tiles on the art. That doesn't yield a good business result. And that's where I think folks need to be more intentional and work with professionals instead of against professionals sometimes to help them yield those results. Because I get it. We all have personal goals. We want to take care of our family, or we want to sell the business or grow it to whatever level there is. But there's a consequence to the decisions we make. We need to manage those consequences, not ignore them. Very different scenario.
I think I tell that same story in a slightly different way. I'm like, oh, you need a new pickup truck and you want it wrapped and you want, everything bells and whistles. That's $100,000 pickup truck. Do you know you have to do $1 million of work to pay for that? And they're like, oh, that's a lot of work. Yeah, it is. Do you want to do $1 million of work for that truck? Maybe you want to change your goals.
Right?
And that's okay. The other thing, though, is if you sit down and look at it and realize, how do I change my profit margin from 10% to 20%? Because then I only have to do $500,000. Well, that's not so bad. I like working less, making more, but you've got to understand what all the numbers say and where the levers are and how to adjust them so that you can work less and make more. Because at the end of the day, that's really what we should be doing. And that's why you went into business.
Yeah. It's funny. When we talk through like a business plan, a lot of people go into business for the flexibility you just mentioned, but they also don't recognize the sacrifice that is the polar opposite of that flexibility they seize. And, it's a constant battle. You can put in an extra hour and do the next thing, or you can not and not have the extra money. Both choices are intentional. That's up to you. And I think some people are unintentional with the way that flows through and then get frustrated with the result.
Or you can build a machine that makes money for you.
Even better.
Right? I mean, that's literally the key. That's what McDonald's is. It's a money-making machine. They sell hamburgers not to make money. They sell hamburgers to buy real estate. The real estate makes money. You just got to understand your model and how to make it work. And you got to put the hard work into building the system.
Yeah.
Which a lot of people don't like to build the machine. They like to do what they do. And there's nothing wrong with that. Just understand what you're getting involved in and what it looks like and the pluses and minuses.
Yeah, the realities, like the professional I mentioned earlier, the business can't exist without him. As a licensed professional, he's a key component to it. But just like you're saying, there's many elements of that business he doesn't have to be butt in the chair every single day to execute. There's so many other things that can just happen. But getting that sequencing appropriate for the scenario is really, really hard, especially when, or I don't know. I mean, like in this guy's case, he was just trying to, do the things he needed to do to get home to be with his wife and kids, which I admire. That's exactly what he should be doing. But then, you hear the story about, oh, I've already spent the money that I haven't made yet. And you're going, oh, slow down. Slow down. The system's not that good.
Well, and I think for a lot of business owners, that's what, when you get behind that 8 ball, it is really, really hard to get on the other side of it. And I don't think people realize how quickly that can happen. COVID was an instant where it happened quickly.
Mm-hmm.
But there are other instances where it happens quickly. It could be a new competitor, it could be a change in technology, it could be health issue. I mean, there's a million reasons why things change literally overnight. And if you're not, A, if you don't know what's happening, and B, if you don't pivot quickly, then you get yourself in trouble. And that's why big businesses, they know how quickly to let people go, and they do it ruthlessly. Um, and I don't agree with that, but you at least have to have, you should always have a recession plan in place. And recession might be the right word, or just hey, the old crap plan. This is
Yeah.
our plan and this is what we're going to do, because in that moment, you're not going to breathe. And so it's a lot easier to just execute when you already know what you're going to do.
Yeah, it's no different than the old, 90 days of emergency savings or something along those lines. The cash alone is not the plan. It's the cash and the plan. Subtle, but important.
Correct. 90 days to me seems a little short. I would love it. My business owners have at least 6 months of capital in their business or readily available, like even if it's outside where they can tap it, because I think most business owners can figure something out in 6 months.
I do too.
But it takes time, and so having that gives you the flexibility.
Yeah, yeah. And what's really interesting is, you're saying it doesn't necessarily have to be cash. It could be a line of credit. It could be home equity. It could be a lot of different tools.
Lines of credit, though, on days like today, get pulled. We're sitting here. I know this is going to be a while till this comes out. It's August 5th. In case you haven't noticed, Japan blew up over the weekend. All kinds of crazy stuff is going on. And that is when banks freak out. And when banks freak out, they stop lending. As a matter of fact, last week, I don't know if you saw the news, there was a building in New York City that sold for 2.5 cents on the dollar of what they paid for it.
Oh,
So it
wow.
was like
No.
a 200 and something $million building that they bought probably like 15, 20 years ago. It went on auction and sold at $8 million. And it's still running cash flow negative because it's only about 30% leased.
Hmm.
And these are strange economic times. But now you can buy a $200 million building for $8 million. If you know how to turn it around, you got plenty of money to be made.
Yeah, there's one of those, another one of those businesses that was going to fail that is now going to succeed.
Correct. Yeah, someone got wiped out, and that's what I think people need to realize. There is always opportunity in good times and bad times.
Yeah.
If you have cash and you can breathe and see, you can take advantage of it. Go ahead.
The emotional side of this toll is, I think, a real one that's inside of this too. Like it or not, I mean, biology is fight or flight first, logic second. So sometimes internally, especially when we're talking with folks, when you're talking through maybe good or bad financial positions, give space for biology to play out, because they're not going to hear what you said when you said, "Oh, by the way, it sold at auction for $8 million. You just lost your shirt." They need to react. You need to give space to those reactions. It's important to play in a trusted space to get the message across.
I love when I get texts from my client, especially when things are going wrong, because then because honestly, we get to fix it before they screw it up. And I at least show them the options and I get them out of their head. I go, "Hey, here's some options." They're like, "Oh, I didn't think about that. That one looks good." I'm like, "Go execute. Let me know how it turns out." And sometimes you need that.
They're beautiful opportunities. I think people try to respond, whether it's an email, phone call, or text, to get it back out of the inbox sometimes. Oh, I responded to that. It's one less thing to do. When in fact, just like you suggested, it's an opportunity. how can we lean in, have a two-way conversation? If I could show you one other alternative to what you're considering, that's a win. And that's
Oh,
really where I think that advisory space excels. We started this with people aren't always good at it. Some CPAs don't do it anymore. But is it an opportunity that you're going to seize and give somebody some options to think through differently? Sometimes it's that simple.
and a lot of times, I think the first step we do is we help them to define what they want. And then we're like, okay, here's a couple ways to do it, and try and give them at least a couple options to think through. And that's the thing. If I give them a couple options to think through, they may not even like them, but now they're thinking.
Yeah.
And once they're thinking, they'll do the smart thing. I trust them. They just need to kind of get out of their own way sometimes and get to moving, and that
Me too.
works. So we also share another passion, which is coaching. And it's funny because I learned a lot on the soccer field. Everything from bench management to putting the right people in the right place with the right message and the right systems. To me, soccer was a game of systems. When X, do Y. And then, of course, there was managing parents, managing communication, managing the referees. And the thing that I used to really, really love, managing the opposing coach. Because if I could get him to lose his cool and start screaming at his players, game over.
There's so much at play, and I like drawing the analogies between business and sport. And just like I'm a believer in the game, in the systems, and all that's there. I tease the players that I coach all the time. What were you thinking in this scenario? And oftentimes they're worried about making a right or a wrong decision. That's not what it's about. I just want to see what options you see, what options you don't see. Maybe we can compare notes because maybe you see something from the middle of the field that I can't see from the sidelines while I'm coaching. But all of that management and play and communication, you've kind of got to learn where are the boundaries, what's good, what's bad. It translates in business. You've got to motivate folks. Sometimes that's through love and rah-rah, and sometimes that's through negativity and yelling. Sometimes there's a bridge in between. You all of those different variables come into play because it's not just as linear as show up, generate revenue, take your profit home. If it were that simple, everybody would be doing it. Nor is show up, dribble the ball down the field, and take a shot. It's not that simple. You've got to adapt to all those different things that are going on.
So true. And I'm surprised at the similarities and the lessons learned. But it was definitely fun, and they're very much kind of interchangeable, as you've kind of talked about. Plus, it's harder to yell at kids, especially when they're young and they're not yours.
The true negative yelling is, I say it in yelling. Sometimes you're just trying to get their attention from across the field. But one thing I've really found that is a passion. I don't coach my own kids. I do this as a vocation for fun. And if you can communicate on the same level, and a beautiful story is there's a player. We talk about triangles and geometry on the field, and you break down the team, you set up triangles, and you got to move space probably 6-8 weeks constant. We're talking to this guy about it. And very last game of the year, we play a really, really strong team. We're tied. He needs a break. He's one of our key defenders, and he comes over and he's like, "Coach, I've never been so tired. These guys, they get in these triangles and they're just wait. Is that what you've been talking about all year?" And it clicked right then and there when he subbed off. But those are the moments you live for, because the minute he saw it in his head, he was next level. We ended up winning the game, but he was exhausted because he didn't see it yet. But it's a beautiful analogy back to business and work. Sometimes you're out there grinding because it's 8:00 and I'm supposed to go grind. What's your
Who
purpose?
said
What's your
that?
intent?
Why are
Right.
you grinding at 8 o'clock? I mean, maybe if you started at 4 in the afternoon.
But I think sometimes people believe in the work harder concept, but you've got to, it goes back to the intentionality again. Are we executing on the right things? Are we developing the system? Or are we fixing a broken system? If you're
Hmm.
constantly fixing it, stop for a minute and revamp things. Don't just keep fixing it. There's so many good fun analogies that come out of that. But I like telling the story about that one defender. And I'll never forget him. And to this day, I probably wouldn't recognize him because he, 13-year-old young boy, if he walked up to me and said, "Hey, coach, who the heck are you, man?" But those are the fun things as you go through.
That they are. I will tell. I had one goalie who was phenomenal. Like when it came to penalty shots, I think he was 80% like block.
Wow.
Well, but you know what he did? He learned to watch the approach. And based on the approach, he knew where the ball was going before they kicked it. And so, for the most part, he was good at picking it out because he learned what to watch for, what the signals were, what comes before. And that's going to tell. And the same thing is true in business, right? We can see the early signals to tell us what's coming. And if we're paying attention to them, then we know what the outcomes are going to be. But you got to be able to figure out for your business what are those early signals. And if you can see them, you can react with ease.
Yeah.
And that's kind of the key. And one of those is cash flow, right? Or lead flow. All of these things are predictable when you learn how to read the tea leaves and have dashboards that show you that. So, you were going to say something?
Oh, the dashboard concept is I think sometimes folks walk into a scenario expecting the dashboard to be customized to them. And this is my case where you're saying, "Hey, well, what do you want us to say?" "I don't know. I just want you to tell me the things that are relevant." And sometimes we tease and we're like, "What do you think we've been doing for the last 18 months that you haven't been listening to?" so again, it's that translation game. Do they
Right.
understand? Are they able to take action? Are we both able to anticipate in the same ways? It's funny, but nobody wants to have that awkward moment with their client. But I think it's important that you can because you need to.
We always tell our clients, we'll tell you the truth even if you fire us, because that's what we're here to do. What are some of the biggest issues you see with your clients?
So I think there's two that are pretty big for me right now. One is the pace at which information is coming is just overwhelming. There's different tools. AI is making everything much more compliant, but much less compliant at the exact same time. And I don't think folks have the skill set to adapt that swiftly. There's a fatigue that sets in. And then two is there's some level of customization that is expected. And I tease people, I'm like, "Hey, it's so customized, it's going to go on one of four forms because that's all we got to file." I understand what their request is, but I think sometimes because the data is available, we're choosing to focus on it, even though it's not a relevant data point. And
Mm.
it's very different if it is a relevant one. And sometimes that's hard to translate with different folks because we can see as much information as we choose to right now, especially with the evolving trends in technology. But is it useful?
I agree, but, and here's why I say that. I get sold all these tools, and there are these things that will plug into QuickBooks and give you all these beautiful, shiny reports. And I've looked at them, I'm like, that is a beautiful report. What the hell are we supposed to do with it? And
Yeah.
and that's the key, I think, for most business owners. We use what we call a standard framework for every business owner. So it's kind of like, hey, here's a car. It comes with four wheels, a steering wheel, and an engine. All right. We need all of that. And then what we do is we put our wrapper on top of it. And we go, okay, for your business, these are what we have found to be the best indicators. And we're going to put that wrapper on your dashboard. So we'll figure out what those are. Some of my clients have very few of those things because that's
Mhm.
the way their business is. Other clients have a ton of them. But even though they have a ton of them, they're still extremely manageable. And what we do when it comes time to look at the dashboard is ignore all of this, focus there. See that? That's the one that's lighting up. And because that one's lighting up, we need to investigate and figure out what's going on. We can ignore everything else.
Yeah, I
And
think
that's
there's
really
so
what
much
we do.
wisdom in that.
Yeah.
That just being able to distill down and help people really focus, because probably the client knows it, but if you're able to reiterate or validate that gut instinct that maybe sometimes they're uncertain about, it can compel action in a different way.
Sometimes they're aware, sometimes they think they're aware, but their thinking doesn't match the actual dashboard. It's like, oh yeah, I think I got plenty of gas. Huh. The gas gauge says you got a quarter tank.
Right.
I don't know if that's far enough that, if we're just going to the grocery store, sure. But if we've got a distance to go, we better figure out how we're putting more gas in. And
The
you might have to
attorney in me
plan that.
wants to go back to the operating agreement and define plenty.
Oh, have fun. Honestly, that's the other part that we do because it sounds like in your case, you've got one shop with all these different parts to it.
Yeah.
Whereas for most of my clients, they've got all these different shops. And each of these shops is telling them, this is the best, this is the best, this is the best. And I sit down and I go, this is what you told me you wanted. None of these are the best. Maybe you need to go back and ask these questions because I'm sure they can get you that if you tell them this. And it's a lot of times it's just discerning what they're being told and helping them understand the pluses and the minuses. Going back to where we started, S Corp, maybe here are the pluses, here are the minuses, here's the things. Based on what you're telling me, here's why I don't think it's a good idea, or here's why I think it is. And it's
I think
specific.
you raise a really beautiful point here. And maybe it's complicated. I've always wondered if sometimes we allow the client to self-select too much. Not that clients are not sophisticated enough to do some of that, but if I go to, say, online document maker and click all the right buttons and generate an S Corp set of documents and hand them to you and say, here's my entity, I should be an S Corp, based on what? And just like you illustrated, is it really the best set of facts? You actually gave me the goals. Maybe you didn't give the other person the goals, or maybe you did and they didn't listen. I don't know. But this self-serve DIY can sometimes get in the way for folks when we're trying to go too fast or we're trying to save some costs.
I think even if you go to someone who's an expert, if they're the kind of expert who goes, we believe in S corps, they're perfect for everyone. They aren't. They may not understand and discern what the differences are, or you might go to somebody who, hey, all we do is sell S corps.
Yeah.
In which case, you're getting an S corp. Sell me a hammer and everything's a nail, right?
Of course.
But you might need a screwdriver, and if they don't sell screwdrivers, you're in the wrong shop.
We try to coordinate conversations, and I recognize I do have a lot of items under one roof, but we need other voices at the table.
Mm-hmm.
And you're raising some really, really interesting points that I think folks need to consider as they're going through the process. Because we go to the let's go back to McDonald's and start ordering some healthy food. You can do it. It's available. It's there. But maybe a cheeseburger and fries for every meal is not the best decision. It's a tough one to pull off, right?
It is. It looks good and tasty, so let's just go with it. I'm sure it'll work out. If people would like to learn more about your services and find you, what is the best way for them to do that?
Yeah, a couple of different ways. One, if you just want some free content, find me on LinkedIn. Just search for my name, Chris Papin. if you're looking for something professionally or kind of want to learn more about us or connect with us in any way, go to papincpa.com. We've got a lot of tools and materials there as well, but it's a more direct link to me and my team.
Cool. We'll put that in the show notes. Thank you so much for joining us today.
Same. I thoroughly enjoyed it and look forward to another.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.